Let's get some expert analysis here on this GDP number, which, of course, is a decline of 1.4% versus an estimate of a gain of 1.1%. Joining me right now is former chief economist at the IMF, Harvard University economics professor, Kenneth Rogoff. Ken, it's always a pleasure to see you. Give us your reaction to this GDP number this morning, down 1.4% on the first read.
Yeah, well, it's a preliminary number. I was expecting a low number, but it's shocking. I really don't want to say it's, even below the worst that I thought it might be. 8.5% inflation, more than minus 1% GDP growth, not a very good quarter.
Where do you think this goes from here, Ken, and what's going to save us? We spoke with Brian Moynihan on this program yesterday. The CEO of Bank of America talked about how strong the consumer is right now, Ken. And I know you are also studying this shift in spending. And even though the consumer has shifted spending from buying goods to spending money on things like travel and getting out and services, you're still seeing a growth story that is deteriorating.
Well, I think you said it exactly right. It's a growth story, but it's deteriorating. And the question is how far. The consumer has a lot of money saved up from stimulus checks and savings from the pandemic. But on the other hand, inflation is really high. The war is still going on. And I think the biggest unknown is this Fed tightening cycle. If they don't hike rates a lot, there's going to be inflation. And if they do, there's going to be a massive recession.
Well, we're expecting a rate hike next week. In early May, we're expecting a 50 basis point hike. Is that going to be effective, and this string of rate hikes, in stamping out inflation, Ken?
Well, they've decided to go faster, but they really haven't decided to go far. And the markets still seem to believe that, they can raise them 3% and maybe everything will be fine, 2-3%. But I think they're going to have to go to 4 and 5% to stamp out inflation. Will they? They talk tough, but when, the rubber hits the road and it really gets grim in the economy and the midterms coming up, I suspect, as I think I told you last time we spoke, they'll end up allowing inflation to stay elevated and we'll be in a low growth, high inflation story.
Liz Peek, jump in here. It seems, Maria, as though some of the shortfall in the first quarter was an unexpected, not particularly strong spending on inventory building. But I would call your attention also to the PCE, the price index, which was up 7% in the quarter compared to an increase of 6.4% in the fourth quarter. So I think what we see is, as perhaps we all knew, that inflation is not moderating. At least it didn't in the first quarter, but in fact, it got worse. Also, I think a fall off in government spending contributed to this. I would go back to your interview with Brian Moynihan. I think the consumer is still actually spending. And in fact, the disposable personal income numbers and spending numbers for the consumer in this first quarter were pretty good. So I don't think this is a consumer story. I think the inventory issue might be more supply chain problems and an inability to build inventory. I think that's the thing we have to watch, because that's been a big underpinning of growth. And if companies now feel their inventories are in good shape, that's going to bode ill for the second quarter growth as well.
And Ken, what about that? Because we've got this graphic here of what's going on in outside of Shanghai, where, of course, the whole city is locked down because of COVID restrictions, and that is adding to an already very nervous supply chain situation. This is a picture of the tankers and the cargo vessels that are stuck, unable to load and unload. Your take on the input here of the supply chain, and that's impacting inventories, causing this 1.5% decline in GDP.
Yeah, well, I mean, there's a technical aspect to the decline. So we're growing, but it's slowing down. But what's going on in China is very scary. Their COVID-19 policy is just not working. They don't seem to be willing to admit it. I think the Chinese economy may already be teetering on recession, something we thought just wasn't even possible in China. We thought, they get 2 or 3% growth. That's terrible. The supply chain issues are going to keep coming at us. The war is not over. China is nowhere near an exit to this. And so we're going to keep seeing the supply chain issues, and we're going to see demand starting to be curtailed as the Fed raises interest rates and inflation hits into, people's spending power. Yes, consumer is still strong, but it's, going to be challenged as the next 12 months go on.
So Ken, obviously the question becomes, are we going to see a recession? There are a lot of, opinions out there, a debate on whether or not a recession hits this year or next year. Where are you on that? This clearly the first of what could become, more weak stories on GDP. I know it's just the first read. We're gonna get an update on GDP. But do you think we're going to see a recession?
I think the chances are at least 50-50 that we'll see a recession over the next year. What I feel really worry about is I don't see how the Fed will both bring inflation down to, say, 2.5% and 3% and not have a massive recession. I think to do that, they'd have to hike rates, 4 or 5% at least. And over the next year and a half, I don't think they're going to do that. I suspect we're going to end up with still high inflation and, maybe even still a recession.
Now, we're talking about the PCE index. Liz brought it up. I want to get back to Cheryl. She's got more data, and I want to get your analysis on it, Ken. Stay right there. Cheryl, what have you got?
Well, there's a couple of things in here I want to bring up. First, it's business inventories, okay? If you look specifically at the business inventory change, that cuts 0.84 of a point off of GDP. You would still have a negative number, but that's substantial, Maria. Okay, that's substantial, because I was looking to see where the real pressure was, and I mentioned exports. Also, if you take the data and you strip out motor vehicles, if you strip that out, that was also negative as well. So the export data, those are the three things I found. Now, to the price story and the PCE numbers that Liz Peek initially brought up, that PCE price index, that core PCE price index was 5.2%, and then the headline number for PCE price index was 7%, but real final sales down 0.6% in the quarter, real final sales. So I think this gives us a little more color into kind of where the weaknesses were for the report. But again, that business inventory piece of the pie, that's half of your 1.5% negative number that we got this morning, Maria.
Ken, your reaction?
Well, I think this all adds up to this growing risk of a perfect storm in the global economy, where Europe, because of the war, is going in recession. China, because of its COVID-19 lockdowns, is going into their version of recession. And the U.S., with the rate hike cycle, they all reinforce each other. And the odds of really having a global recession are really rising by the day. And this report certainly doesn't do anything to dampen that view.
Yeah. So where is the growth that you see right now? I want to bring in the CEO of Hologic, Stephen McMillan, because Stephen has been overseeing a growth story at Hologic, particularly as it relates to healthcare. And Stephen, that's where I want to start with you. We've got Ken Rogoff here talking about the macro story. Give us a sense of what you're seeing in terms of the growth in products. You are one of the leading makers of the mammogram machine, and I know you've got incredibly innovation happening at Hologic. Where is the growth from your standpoint?
Sure. First off, interesting for me to be on a panel with Ken Rogoff. My economics professors at Davidson would be really excited by that. But, back to the business. The supply chains and certainly the lockdowns in China have had an impact in terms of, as we've all known, the global semiconductor chip shortage. And that's created a challenge for us in the short term on our mammography machines, because we haven't been able to get as many chips. So, it's back to where all the unintended consequences of these lockdowns really rippling through the global economy at this stage. Now, in our case, so many of the positives are offset by our positive both COVID business, but also our underlying women's health testing for, sexually transmitted infections and our, gyne surgical business. But our mammography business right now for the next couple of quarters, we're not able to fill the demand because of the supply chain issues.
And what do you see in terms of any alleviation there? What do you, I mean, you don't have the product, you can't sell the product, and that, it hits the whole supply chain and the whole, business standpoint has a lot of impacts there. If you don't have the product, you can't sell it, that impacts growth. Yeah,
and more importantly, Maria, it impacts women's health. What I'm so proud about our team, right? We've been waking up every day, making a difference in the world. When the world shut down, as you remember, we were talking to you, our team showed up every day to develop one of the first molecular COVID tests in the world. And our team, flat out producing those tests for the last couple of years and coming to the world's rescue when they've needed us. We do worry right now on women's health issues that with so many things going on in the world, women's health is really taking a little bit of a backseat. You all know it, that, women have prioritized other people's health. And we need to get back to, women getting their screenings and all of those things going forth so that we can get back to a more normal focus on total health and not just on COVID. And I think that focus on COVID is rippling through the economy here in so many ways, all the additional spending, the inflationary pressures, right? Because we've taken a one-size-fits-all approach instead of really trying to approach it more holistically.
Yeah, I think this is such a great point. And let me come back to you, Ken Rogoff, in terms of where you see growth right now and whether or not inflation is undermining that growth. We had Bob Nardelli on the show yesterday, former CEO of Home Depot, former CEO of Chrysler. He said, he's on a number of boards. He said inflation is killing his businesses.
Well, I mean, absolutely, the inflation's having a huge negative impact, and it's only going to get worse. We're going to see wages going up to catch up. I don't think this is just a matter of commodity prices coming down. But I think, first of all, hello to Professor Davidson. But to the medical profession, the tech industry is really doing incredible things. I mean, long-term quality of life. But I do get very concerned about all the postponed healthcare that's taken place under COVID, how that will affect life expectancy, quality of life in future years. And that's something we need to get back to normal.
That's a great point. Let me get your take, Stephen, on what you heard on wages there from Ken, because, we had Jamie Dimon on the show a couple of months ago. He said never in his career has he seen this labor market as tight as it is. So, Stephen, the question for you, are you being pressured to pay up in terms of salaries? Is it harder to retain talent? What's going on in terms of the workforce right now at the company? Stephen.
Well, certainly, I think we're all feeling that. And, the idea that inflation was going to be transitory back at the beginning, we were all saying, I think a lot of us business leaders were thinking this does not look transitory, despite what the government might be saying. And I think we're feeling that. So we've certainly had, some of our employees getting, big offers of raises elsewhere. And we've never seen the pressures that we're seeing. I think it will ripple through for probably another year or so. We're trying to take as good a care as we can with our people. But I think we all are certainly experiencing that, particularly in the U.S., but, even around the world.
So you've got to grow regardless of the macro story around you, Stephen. What are you going to do? Tell me what's in the pipeline and what you're expecting to lead growth at Hologic then in the coming year.
Sure. What we're so excited about is, while everybody else was, focused, and particularly Wall Street was very focused on a lot of our COVID business over the last couple of years, we did some nice acquisitions, but our R&D teams have also been incredibly busy. And we've come out with new products across all of our businesses. And, even within just our women's health, we've got an exciting new assay for what's known basically as bacteria vaginosis, which is one of the primary reasons women go to their OB-GYN to get, tested. And we've developed the first molecular test that's really great for detecting that. So we have, and we have, new products coming out in our mammography business, as well as our surgical business. So we've got a great pipeline of things coming through, all of which, bode really, really well for our growth ahead.
Yeah, I mean, and thank God for you and for the healthcare industry. That's one of the areas that the U.S. is counting on growth, along with technology, Ken. In terms of the most important metrics that you're looking at this morning, Ken Rogoff, to give you and inform you of where we are in this cycle, please let us know. We know that the GDP is somewhat backward looking, and we are going to get more revisions here. What's most important in terms of the metrics you're looking at?
Well, consumption's almost, roughly 2/3 of U.S. growth. And so that's obviously the main thing. When that starts fading, we're really in trouble. But the supply chain issues are really, vicious and not going away. By the way, our tech industry is great, but I don't know what we're going to do if we have problems in Taiwan. I'd be interested to know Stephen's take on that. It looks to me like we're years away. And I wanted to say one thing about growth. The U.S. is always dependent on immigration for growth, but we're one of the few countries that doesn't have sort of a rational policy towards immigration. What do we need? Who do we want? How many do we want? It's just sort of, random. And of course, it's become really acute, the problems recently.
Yeah, I mean, bad policy equals bad outcomes, and we're seeing a lot of bad outcomes. Stephen, give us your sense of what you're seeing as a result of this supply chain issue, as Ken is referring to. Stephen, has that been a major issue? You talked about the chips for the mammogram machines. What else can you give us color on in terms of the nightmare that is the supply chain logjam right now?
It cascades through. So you certainly have the chips, but you also, I think we just see the freight issues. And freight and supply, certainly, we're lucky that most of our supply and most of our manufacturing is actually still done in America. You'd be very proud, Maria. I think you might know this, but all of our mammography machines for the world are made in the United States on the East Coast between Connecticut and Delaware, of all things. Most of our molecular tests are made in San Diego. And so we have, a very strong U.S. supply chain, which has worked well. The one caveat for us is we are dependent on the chips that come from elsewhere in the world, and that's been our biggest challenge. We're excited that partners like Intel are investing in huge facilities in the United States. I think that'll be great over time, but that's going to take years for those fab facilities to come on. But I do think, having more production in the United States in the long run is going to be good for both the U.S. economy as well as the global supply chain and all of us companies. So, but I think, we're all seeing just the increase in freight costs, fuel costs, everything cascading through. And that is creating a lot of the challenges we're all trying to balance and deal with right now.
And a truck driver shortage, which of course is critical to getting the product from A to B. Liz Peek, jump in here.
Well, I think what is intriguing to me is kind of how the tight labor market is impacting real disposable income. Wages are going up, but the fact is it's being eaten up increasingly by inflation. So I think we're going to see an explosion, Maria, in wage increase demands. I think workers are going to be going to their bosses and saying, look, I'm not making ends meet. And all the numbers in this first quarter kind of attest to that. Real personal disposable income's down, not because people aren't getting more money, but because inflation is so hot still.
Mm-hmm. Your thoughts, Ken?
No, that's very well put. I mean, I think we are going to see more of a wage price spiral than the Fed, and many commentators are admitting that you've seen reports recently in papers saying no, inflation expectations are anchored. If I'm a worker, I'm not looking at some market inflation expectations. I'm looking at my wage going up less than inflation, which seems to be going up more and more. And the labor market's white hot. It's hard to imagine we're not going to see very big wage increases over the next year. And some of that's going to fuel back into keeping up inflation, which I see still being very high, 3.5%, 4%, even perhaps by the end of 2023.
And you've got
Ken,
pricing power, Stephen. Go ahead, please.
Oh, I was just going to say, to build on Ken's exact comment, I was talking to somebody, an independent businessman the other day who supplies goods to Jack in the Box and some of those things. And, he was talking about the 8.5% that we show as a headline rate. He said, boy, everything I'm dealing with is a lot more than that. The cost of eggs, the cost of chicken, the cost of transport, all those things are going up at a higher rate. So, we're all trying to balance those areas and not wanting to pass on all of those costs to consumers or to our customers, because we want to be, very responsible in that and find the efficiencies to manage through it.
But there's a limit you can do that, right, Stephen? I mean, at some point, something's got to give. If you're paying more for the components for your products, you're going to raise prices. You've got that pricing power. Are you expecting those prices to go higher by year end?
We're trying to moderate as much as we can and still take a longer term, more conservative approach to our pricing increases, and just trying to find more and more efficiencies that we can along the way. Having said that, certainly we're going to have to take some along the way.
Yeah, sure. Ken Rogoff, how does the Fed change things? We're going to get a interest rate hike next week at the Fed's May meeting. We are expecting a 50 basis point hike. Are you expecting several 50 basis point hikes?
Oh, goodness, yes. I mean, I think we're at least going to get a few before the economy slows down enough that they start giving pause. I mean, obviously, the Fed was fighting the last war in its decision making. I think the big mistake here was really the big stimulus that came in March 2021, which was much too much, much too late. And the Fed was in an awkward position because inflation hadn't gone up yet. Biden hadn't reappointed the Fed chair yet, which he had hanging over the Fed. So there are many people saying this is a historic mistake, worst Fed ever. I think this was a case where the progressives came into Washington breathing fire. The academic profession was saying you're never going to see inflation again. And the Fed listened for too long to that.
Yeah, I think that's great analysis there, because after that, it wasn't the end of the spending. You also had an infrastructure package following, and you also had efforts to keep pushing through the Build Back Better agenda, which some people called $5 trillion in cost, even though they were calling it $3.9 trillion in cost. It did not go through, but there's still an effort to push that through. Stephen, we invited you on to talk about your earnings and the great performance that Hologic is in. Let me give you a minute or so to go through the growth story before you go. I appreciate you joining the panel here because it's all connected, and we were able to connect the dots on a very disturbing GDP report out this morning.
Oh, sure. Well, thank you again for having us, Maria. We're so excited the way our team has responded to both provide the COVID test, but also provide our base business. And, you've known our company for a while. We care deeply about trying to impact women's health on a global basis. And as COVID hopefully subsides, we get back to really that core mission that we're all excited about. We even announced earlier this year a long-term partnership with the Women's Tennis Association, the WTA, that I think is one of the great sports organizations in the world that's been fighting for women's rights really now for 50 years. And, all about women's health, women's rights, women's equality, and is most perfect fit for us as a company to be allied with them as well as we try to carry this message out.
Yeah.
And, really, women's health has been lagging in the world. We need to get it where every woman can go to a doctor, be taken seriously, and dealt with properly.
Yeah, amen to that. Ken Rogoff, now the focus will turn to Apple and to Amazon after the close. Apple is a really important story, giving us a hand into the consumer, into the China and the supply chain nightmare, into what's going on in terms of the broad macro story. Your thoughts on what we should be looking at in terms of the Apple quarter after the close tonight?
Maria, I have to beg off this question since my daughter now works at Apple, so I probably shouldn't comment on it. But obviously, the tech stocks have done extremely well, but now it's been challenged as interest rates go up because they're very interest sensitive.
Well, I think that's terrific that you gave us that disclosure, Ken. Thank you for that. It's always a pleasure to see you. And, gentlemen, thank you very much for playing with us here on a busy morning. Stephen McMillan, Ken Rogoff, Cheryl Casoni, Liz Peek, Tammy Bruce. Always a pleasure and an honor to be with all of you. Have a good Thursday.